Good evening. This is Dwayne Lowry for the DPP Grain Desk with the Sunday night grain outlook for Sunday, October 16th. There's not much to talk about here tonight. Weather isn't much of an impact. The outlook for the U.S. harvest, there'll be some disruptions. Most of these disruptions will occur in favor of the eastern areas, but nothing problematic and nothing long-lasting. Harvest is advancing very rapidly in many areas of the Midwest. Guys are nearing completion in beans, and corn is rapidly gaining traction. Yield reports continue to be mixed. You can find pretty much whatever you want to hear. I still think that personally that we're dealing with a situation where yield ideas will grow as we get towards the final uh, production numbers in January as opposed to decline, but there's a lot of arguments about that. As far as tonight's trade is concerned, last week's positive performance in corn, wheat, beans, mostly beans were the leader. Corn performed well. It's also wheat struggled to maintain the type of strength that it had earlier in the week. Um, I would say that the gains we found last week are going to be difficult to build upon. Technical conditions are not conducive to building upward momentum here. Fundamental factors seem to be stagnant. Not a lot new for news. We don't have South American weather storyline yet to build any storyline there. And so I don't think we're going to get much follow-through to last week's price action to the upside. It also needs to be pointed out that throughout much of this calendar year, producers have been slow to market the 2011 crop. Part of that is due to price optimism and a lot of talk about concern about yield and the idea that last year producers left money on the table by making forward sales early. All of that combined to lead to a very slow versus normal sales progress. However, after prices dropped sharply during the month of September and early part of October, producers have been caught wondering, okay, now when do I make this next sale? I don't have as much sold as I normally would, and a lot of people were hoping for some sort of corrective rally. The rally that we had last week brought corn back towards levels that was basically the midpoint of a trading range through most of the calendar year of 2011, other than the month of August. So from a opportunity to catch up sales, if you're a producer and you know that you either want to or need to make some sales in this time frame, or maybe describe this time frame as being at some time prior to the end of the year, I think this is a good opportunity to look at that. We rallied corn and beans nicely, but I don't think we have the type of sponsorship from the spec community to continue to push prices higher. It's the wrong time frame of the year to get it done. And I still think you have outside markets that are going to drive the influence. As far as outside markets are concerned, they have had some upside in crude oil. Metals have had some uptick. The stock market is back at the upper end of a trading range. But I think there's many signs that suggest those markets could easily and quickly turn to where they become a net drag on commodity markets and become a net drag on the global speculative environment. So overall, I think we're dealing with those influences that are going to be a drag on corn and soybean prices. And I think that you take advantage of the recent gains last week. And if you've got to make sales between now and the end of the year, I think you consider current values maybe one of your best selling opportunities between now and then. It's also noted over the weekend that producers have started to become a little more aggressive with sales. They viewed this corrective rally as just that, an opportunity to get caught up on some sales. And so I think there's some fundamental concerns about how much more we can get going if, in fact, the yields are going to be the same or grow a little bit, if, in fact, the outside markets are going to become more of a drag on commodity valuations. And you always have to wonder when you approach this time frame of the year, the speculative environment is not enticed to initiate new positions and new sponsorship. They may continue sponsorship of old positions, but in the case of what we've experienced during the last several weeks, we've seen a mass liquidation of very bullish commodity sentiment. And I don't think you're going to immediately resurrect new bullish commodity sentiment going into the end of the year. So I think you've got a lot of strikes against the market, a lot of warning signs, and a lot of things that suggest, hey, if you need to make sales, now might not be as good a price as you wanted, may not be as good as some opportunities you missed before, but from between now and say the next 45 to 60 days, this may be some of your better selling opportunities. So take a serious look at that. As far as tonight is concerned, I think there's an unease about the European situation. I think that's going to be brought to the forefront again. I think that'll may cause the outside markets to be a little bit negative to us. I think the Friday's gains in the grain trade will be difficult to find follow through. So I'm going to go with the expectation of a little bit lower here tonight. And I wouldn't be surprised that as the week evolves, we'll see grain prices ease. For the DPP Grain Desk, this is Dwayne Lowry. Thank you.